Hello, nice sunny day today, even though the market is still dark and dreary. I'm starting to think that I delay doing these videos when the market's not getting any better. So we do have the March numbers for the last 3 weeks or so we've had them. And it's not great, but there do seem to be some signs of improvement, especially with detached homes. So overall sales are still down almost 3% from last March and almost 32% from the 10-year average. So that is, again, not great. But Greater Vancouver Realtors Chief Economist Andrew Lee says that the detached segment seems to be awakening, and we can feel that actually in the market right now. It's not as optimistic as it sounds, because the reason that we're seeing more sales is because we're seeing a lot more sellers dropping their prices so that buyers will pay what they're asking, as opposed to buyers sitting around waiting for the seller's price to drop. Because the market's been quite sluggish, I have been going to a lot of masterminds and educational sessions that are quite helpful in figuring out what's going on, what the long-range forecast is, and how to best advise my clients, buyers and sellers. I recently went to one where my favorite economist, if there's such a thing, Benjamin Tal from CIBC, if you haven't heard him speak, he's great because he's very smart, he has really good predictions, and he's also funny, which is a bit rare in a bank economist. Anyway, he has pointed out at a recent session that the one constant that we need to pay attention to is that being priced too high and holding that price is hurting sellers every time. And of course it is. If we start too high and wait to go down, we're chasing the prices down. So you start too high, you see that the price is down here, you come down there, but by then the price is down here. So sellers who start too high and then slowly come down, the prices are always ahead of them, and they leave a lot more money on the table than they would have if they had priced it realistically at the beginning. Obviously, it's natural for homeowners to attach more value to the price of their home than what others might, and sometimes it ends up that they've attached so much value that they're the only realistic buyer for their home. Because we're in the worst market we've seen for sellers in decades, it's really important that sellers try and take the emotion out of the sale and listen to the advice they're being given when it comes to pricing. Benjamin Tal was explaining that prices are still dropping, and he anticipates that will continue to happen. So every month that a house is listed, the seller is going to likely get less money for it, not more. There's not a situation very often where the right buyer comes along unless the house is really, really unique. And again, while sellers often think their houses are unique, in most cases we can find good comparables for them. So what should a seller do in this buyer-friendly market? One of the masterminds I was at, a guy put it quite interestingly. He said that sellers can sit where they are now in a declining market. So their price, say it was $1 million, it's going down every month. And then it's likely to flatline for a while before it goes back up. And Benjamin Tal was also talking about this. If that's the case, say they have $1 million in the house. Obviously here it's often a lot more than that. So they have their $1 million asset, which is making no money for them, or more likely going down. So it's losing value. And this what I'm talking about now is only for people that want to sell. If someone doesn't want to sell and they're going to stay in their house, then of course it makes total sense to stay in your house. Don't pay rent and then pick up the value when the market picks up. But if someone wants to sell and is sitting on the sidelines because their house is not going to sell for what they want, holding on to it while it goes down and while it flatlines doesn't make sense, because they're not going to be moving forward in the life plans that they have for probably at least 5 years before we get up to peak again, to the peaks that we had in 2022 or 2023. It could actually be longer than that. So they can do that, lose money, and then sit there, or they can sell and take that money now before it goes down further and flatlines and invest it. So if you have $1 million that's going down and then flat, it's not making you any money over, say, the next 5 years. But if you take it out and invest it even very conservatively at 5%, for example, you're going to make good money on that. And if you compound it, it will really add up. So for example, the $1 million on earning only 5% with compounding annually should be $276,000 by the end of that 5-year period. Obviously, these are estimates of what the market's going to do, but that is what most people seem to be saying will happen. So again, If you're living in your house and you want to live in your house, that's great. But if you have plans to do something, then you might want to consider taking that money out, putting it into investment, or moving up. If you're moving up in the market, it's a very good time to do it. I had a house in East Van at one point that I actually sold at a loss, which some people are doing right now. I sold it at a loss even though I added a floor to the house, and it was a quite beautiful view floor. People thought it was crazy, but the reason I did that is because I was getting such a good price in kits. So I moved from East Van to kits, did very well. The gap was very favorable for me because East Van hadn't actually come down as much as kits had. So the money in my pocket was much higher than it would have been if I was trying to make that move during a busy market. So smart sellers, smart investors, they do look at the gap more than the actual hard prices. All right, what else do we need to know? The numbers are, not great. So if we look at detached homes, the benchmark price for detached homes was down 8.2% from this time last year, so from March 2025. And obviously it's down a lot more than that since the peak. One glimmer of hope is that it was up 1% from February 2025 to March 2025. Having said that, benchmark price is kind of a, just like average price. It doesn't mean that much. And it's really important in this kind of market to look at micro markets. What is going on in a certain type of product? What is going on in a little pocket? Different pockets in the city are doing differently. Detached homes are selling a bit more easily than condos, and townhomes are also selling quite nicely now compared to what they were doing. So prices do remain soft across all categories, but townhomes are only down 5.7%, whereas condos are down 7.8% and houses are down 8.2% over the last year. So for buyers, there's still opportunities there, but with sales up and listings down in detached homes, it may be that window is closing. So if you're a buyer looking for a detached home, you might want to get on it now. Condos would probably have a lot more time before we see the flat line. I think they're going to keep coming down. Just to give you an example on what's happening in the detached home market, last year we were getting very few offers on homes, and two of the listings that we just got offers on this week, both were on the market for several months last year with no offers whatsoever. So it's not just what's showing up in the stats, we can see it on the ground. So buyers who are paying attention now are actually moving and looking to buy, and sellers are now starting to take more reasonable prices for their homes. So that's going to be good for the overall market activity. So again, it's a very nuanced market. If you have any questions, whether you're a buyer or a seller, there's pretty much nothing I like to do as much as talk about real estate. I'm just kidding, but close. Anyway, give me a call if you have any questions. I'm happy to discuss anytime. Thanks.